Hello, Mark Sturdy here with another summary of our work this week, 7 days ahead. And looking at our summary chart, you'll see that we remain bears of the dollar and bulls of the euro in particular. We have pulled back from our situation, our opinions about the stocks. We are interested in the bearishness of prices and bullishness of yields in the bunds and the gilts, and we're not taking a firm view in oil and gold, but things are happening that are of great interest, and we will come to those. But let's start with the dollar euro. We remain, because of this big picture, we remain bears the dollar long term. We also note that the euro, the euro's, any attempt to sell off the euro, 1, 2, 3, 4 has failed. It's trying to sell the euro by the dollar. At the moment, we think it might yet fail. So while this holds, this band of support for the euro, we are not sellers of the euro, buyers of the gold. Short term, there has been a strengthening of the dollar, there's no question, but we think that may yet come to the same end as it did previously in other similar strengthenings of the dollar. Note, if you will, our long-term, how this short-term strengthening of the dollar should be helping our long-term view that the dollar is going to increase against the yen. And sure enough, here, just to remind you, here's the big picture of a further weakening in the yen we anticipate. The strengthening of the dollar has brought the chart up to the prior high. If we look more clearly, in line with this, incidentally, this continuation triangle which has completed. Note, though, here in particular, the day chart. This is a closing day chart. And no, we're right on that level, 160.27 against the yen, which, if it were to break, would be exciting for fresh selling of the yen, fresh buying of the dollar. Stocks, well, the big bull picture long term is clear and is unchanged, but last week produced a key reversal, weekly key reversal, and a breakdown of supports. So we think this selling may yet go further because of this weekly key reversal and the break of supports. Perhaps even as far as the 1796. Two pieces of evidence suggesting further on the downside. The other pictures are, well, the Nikkei 225 is very much in the same boat that it was a sharp sell-off last week, and in so doing broke through sitting on this support 63.890. Any break of 63.890 will bring forth fresh selling. Other markets are, well, they were less bullish and now they're less bearish. The stodgy euro stocks never got into fresh ground above 62.09. Has sold off last week, failed, you could argue, in this September contract. It's failed twice at 61.42, which is an interesting double failure, suggesting a bit more bearishness, and it has broken the supports from 60.48, 60.65 this morning, so maybe there's more on the downside unless it can quickly recover. So watch that. Similarly, the FTSE, watch the it's in a trading range. Watch this level here, 101.63, were that to break, there might be some fresh selling. But for the moment, it's the S&P 500, which is taking the brunt of the selling, with more to come, we think, possibly the Nikkei. Bonds, the Treasury notes, yield-wise, are in the middle of a trading range. However, price-wise, we think the market is right back on the critical lower diagonal of this price triangle, continuation triangle, bear continuation triangle, suggesting very much lower were this to close on the week, which it hasn't yet. But the prices have come right back to be testing this lower diagonal. Watch for Friday's close. Here's the price action. The market rallied, failed where you might expect it if it's a bear trend, 109.59, the prior low. It couldn't get above it or sustain itself above it, and is suggesting that in line with the trend is intact, and which of course suggests at some point this to come to completion here and a further sell-off to come. German bonds, well, they tried to drop off the yield but found support at prior highs and look to be bouncing. Price-wise, they're in the middle of a trading range, bit of uninteresting. Gilts, we are and have been bearish for quite a long time. bearish on the completion of this big triangle, bearish on the breakdown through these prior lows, and bearish on the way the markets tried to rally back through resistance here and failed once and looks to have failed again. In yield terms, the market pulled back and found support from prior high yields and looks to bounce, we think, again. Price-wise, nothing of interest here, but yield-wise, you can see the once, twice bounce of yields, suggesting we're back in a rising yield situation in gilts. Oil, towards going higher towards the top of a trading range, in particular, has now bounced once, twice off this band of support price-wise. So it looks to me the bulls are intact. Gold, however, suggests to me once having bounced off this prior high 43.98 once, twice, three times, it looks to be making a concerted attack on breaking that support. If we look more closely at the the SEP contract, that's wrong. The SEP contract, we have not only broken through 45.01, but maybe completing a big head and shoulders reversal if the market were to break down through 4300. Thanks very much.